Hey everyone, this is going to be a quicker video. I was just trading today and made a couple mistakes, so I just wanted to kind of go through my charts to make sure that I'm clear on my ideal entries, my stops, and my targets. I'm going to assume that you either watched the video I posted a few weeks ago on fair value gaps or have some knowledge of the ICT mentorship trading strategy so that we can kind of get right into it. And if not, I'll link both of those in the description. But I'm going to try to do here is break down price for optimal setups just to make it clear to myself because I made some suboptimal trades today and just attempt to kind of really hammer this stuff home and in the process hopefully help you see better how these setups kind of form. So right off the open, this was one I was looking at. This is a 15-second chart, by the way, kind of extreme, I know, but just kind of been studying all this extra information that it gives you. So for this particular setup, this was 7:30 in the morning. We formed these lows, eventually broke them a little before the open, started basing a little bit, broke structure, and there was a small fair value gap here. Obviously I didn't trade this. This was a very idealistic setup that I didn't catch, and I was probably only watching the 1 minute at the time, and the fair value gap might not have been here. So, but in any case, the target was this level right here, which was just the overnight highs from 4:15 in the morning, 13,183. Oh wait, now we passed that. 13,183 is right around here. And these highs that I annotated here were from, looks like, yesterday. So 13,229. So that was one level to look for. And then, the theory of all this ICT stuff is that, you break these key pivots, you come back in, and then you might be due for a reversal if you start to break market structure. So that these two levels were some that I was watching. If I happened to take the trade and had multiple contracts on, then yeah, I would definitely look to take some off at that, whatever it was, 183 level. But so that was the first one. And then on this one, I totally missed this on the 1 minute chart. This actually gave a good signal right here. But what happened was right at the morning, we broke these highs again, this 13,229 level from yesterday. The SPY, or rather the S&P, didn't quite make it up there. It did break these highs though that I was watching, and these overnight highs. And so on both charts, on the 1 minute, they gave a nice, fair value gap breakdown, break structure, retrace back up into it, and that would have been the short entry to see some downside targets below, which I was targeting, or I would have targeted the lows, the most recent lows from the pre-market that were formed right around 9:15, it looks like. And so I think what I ended up doing was taking a trade. I think I bought on a retracement into this fair value gap. I went long here, which was totally unwarranted because there's no clear market structure break at this time. I think if this had any hope in being a bullish setup, I should have waited for it to at least clear these highs and maybe retrace back into a fair value gap then. But that was a dumb trade on my part. Instead, we just kept going lower, hit this target eventually, and then created this local high here. Again, this is the 15-second chart, so there's a lot of data here, but you can see overall that this is kind of the high that we're looking for. And then traded below it again, eventually broke structure, and so all the criteria is kind of met, right? You break buy side liquidity, you reverse, you take out sell side liquidity, which was the target here, and now you're breaking structure in the other direction, and you're getting ready for a reversal. So this was kind of a combination of fair value gap candles. Again, I was looking on a couple different charts here, but this would have been an okay setup to go long. I probably would have thrown a stop at these local lows right here instead of obviously having it down here, because I mean, from the time the market opened, it showed pretty significant weakness, and then let me just annotate that. Oh. So it was showing pretty significant weakness, so I wouldn't want to stretch into this buy side liquidity right away. After taking out these lows and reversing back up, I saw that there was this minor pivot that could have been targeted. This is not a trade I took. This is just trying to analyze all this stuff in hindsight. But you know, like I said, everything was there. Broke buy side, broke sell side, structure break, retrace into fair value gaps, and hit this target right here. And so it's not really reasonable, in my opinion, to have your stop at these lows unless you're targeting these highs. Because if you're only targeting here, like I'm trying to explain, then your risk to reward is like 1-to-1 or maybe even less. So that's definitely not a trade you want to take unless you have these lows right here. If these lows weren't there and this was just a straight shot up, then I probably wouldn't be interested in that. But because we have these lows formed, I think that's a good place to, you know, put your stop if a similar situation arises in the future. And so, you know, enter here, stop here, target here, and that's probably like a roughly 2.5-to-1 or 3-to-1 trade. And so this one was interesting too. This was at 10:49. Okay, so this was something I noticed between the NASDAQ and the S&P is on this chart right here. I noticed that we started to get this what I annotate a lot and what I've seen similar traders annotate is smart money technique. When you kind of have this divergence arising, especially between similar asset classes where, you know, you have lower highs forming on the NASDAQ, higher highs forming on the S&P. And so oftentimes that suggests the possibility of a reversal. It's by no means a guaranteed signal, but it can suggest that the trend is changing. And so I like the NASDAQ setup better because we formed lower highs, so it seemed a little bit weaker than the one that was forming higher highs. Broke structure to the downside, created a fair value gap on the 15-minute chart. I actually did enter here and was targeting these lows right here. Did not reach it, unfortunately. It looked like it was about to, but then 11 o'clock, I guess we got some news or something, and it just went to the moon and stopped me out. I had my stop above these highs. And so that was another trade. And then after this move right here, there's a lot of chop in here. I didn't really concern myself too much with this because I consider this entire range to be kind of like, if you're familiar with the strat, this is essentially like mother bar problems where you have this huge candle essentially, and you have it's trading within this range forever, and it can kind of do whatever it wants until it breaks the range. And so that's what I'm really looking for, is to break either above or below that. And so eventually we do break the highs that were formed here at roughly 11:30. And then same thing again, you start to see this smart money technique divergence where you get, again, lower highs on the NASDAQ, higher highs on the S&P. So I was looking towards the NASDAQ again because it seemed weaker if it was forming the lower highs. Broke structure right here by breaking this low. This was a fair value gap that could have been entered in. I did not take this one. This is just analysis in hindsight. So broke structure, retrace back into it. Some more opportunities to get in with some fair value gaps here. And I would likely target, if I had more than one contract, I would target these relative equal lows for sure, and also these relative equal lows, and this one. We didn't quite make it down to that one. This was the furthest target that was hit. And then right after that, you see like an immediate reversal around 12 o'clock. Now, I don't really trade lunch hour that much, so this analysis isn't really too applicable, but either way, just still trying to get familiar with price action here. You can see that, you know, similar to what we had in the morning, there's this huge base, but overall you can tell that these are the local highs on a 1 or a 2-minute chart. This is what you care about to be broken now that we've broken buy side liquidity, broken sell side, which was the target, and now break market structure, retrace back into a fair value gap. This would be the buy signal, and targeting these highs up here. And again, you have this kind of local low that you can use as a stop rather than reaching all the way down into this 13,038 level. That would again make this a roughly 1-to-1 or 1.5-to-1 risk to reward ratio if you put your stop down here and entered here, targeting this level. But because you have this stop, you can be a little more generous and say that, or a little more strict with yourself and say that, you know, your stop is down here, you enter here, and now you have like a 3-to-1 trade again. And so break these highs, not doing too much, just running, waiting for a new setup to appear. And like I said, we break these highs, come back through, we break these local lows, so that's where I would probably start to pay attention. Obviously, depends on the chart you're watching, but I mean, you can consider this as a market structure break, or, you know, some of these lows in here. But I would say that, you know, no matter what chart I'm watching, whether it's the 15-second or the 1 or the 2-minute, I would still consider this as a pretty significant pivot. And so once we reach below that, you can kind of assume, you know, structure is broken or is, I mean, it's not like a super clean break, but, you know, I think it's something to consider is that the trend might change because we're now creating new lows after just making new highs. And so again, on the 15-second chart, you have this fair value gap that you could get short on once it trades into that. This was definitely some news-driven event. This is not. I'm not trying to advertise this as a high probability trade that, you know, since it hit the target that I magically just put on the screen here in hindsight. But you know, I would like to say that this would have worked without whatever this catalyst was, but it just happened to work. I mean, you know, you'll just have to believe me that I had this on my charts before it happened. I know it doesn't mean much because I didn't take the trade myself, but again, just trying to figure out what could have happened here. It could have easily just, you know, gone above these highs and, you know, put a stop right here. Probably would have been a failed trade, but because of whatever happened here, it did attack some liquidity and just stop out a few people and reverse the other direction to essentially screw them over. But yeah, that's pretty much all I wanted to go over. I did have, I think, a total of 3 failed trades today. I think I covered them all. But, you know, all just minor losses, protected my risk. I'm pretty sure the total of all those losses were equal to just one of my wins on Monday. So that's kind of the name of the game. Just protect your downside. Make sure you're taking high risk to reward trades so that, you know, you can take a number of losses and still be profitable and or break even in the long run. But yeah, hope this helped. Let me know what you want to see in the future, and have a nice day.